What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is February 14th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about why something has fundamentally changed here in the market, and it has to do with the game of inflows and outflows. Today, we need to talk about why Bitcoin is breaking out to new relative highs here all the way back in December of 2021, and beyond that as well, what metric we need to watch in order to see whether or not this will continue and potentially lead towards a fruitful outcome for altcoins going into the coming weeks and months. We got a lot to unpack here in today's video, so if you guys happen to enjoy it, consider dropping a like. Let's go ahead and kick off the rambling, guys. So I want to do more of a one-on-one conversation with you guys here today, because I think it's incredible to see the kind of recovery we've had here post-ETF. We had a nice flush down. We came down to the 100-day moving average, tapped right off of there, and started to see a basic reversal back to the upside here within a matter of less than a month, coming off of those lows all the way up to $51,000. And there's really one key reason for it, guys. It's the continued accumulation on the total on the ETF. Now, we definitely were here to talk about when there was a negative net outflow in some days due to the outflows from GBTC and a lot of that recycling of existing Bitcoin and the GBTC product into other ETFs. However, we have been seeing net overall some incredibly positive days. The last 4 days of inflows have been some of the biggest for Bitcoin. We saw a 3,000 Bitcoin inflow into the ETFs. And this is including, mind you, GBTC outflows as well. So this gives us the real metric here of the actual spot Bitcoin that's starting to be shelved off and held by more long-term investors, or at minimum being held in these ETP products that is going to take them off the order book. All right, so we've got 3,000. We've got 8.5 thousand back on the 8th of February. 12,000 Bitcoin back on the 9th of February. And here on the 12th, a nearly another 10,000 Bitcoin, 9.8 thousand Bitcoin removed from the circulating supply into these spot Bitcoin ETFs. Wow. This was yesterday, so it'll be interesting to see what's going to be coming up today, but we're already seeing here within price that same kind of accelerated price move here on the open market days. Right? It seems as if when we come towards the weekdays here, price just begins to accelerate here because there are those new inflows coming into the ETF product. This is the direct reason Bitcoin's going up here. And considering that, we need to think accordingly about how we're going to approach investing in this market, right? As we do move up here, those inflows need to remain strong in order to get the same kind of price appreciation we're seeing here, right? So for example, on these kind of moves where we're seeing anywhere from around 10 to 12,000 BTC a day, right? We can see a nice 3% move in Bitcoin's price, give or take. So as we move higher, it's going to demand more and more inflows to get that same kind of price appreciation benefit here in order to disrupt the traditional supply and demand balance between just spot traders and miners. This is a new dynamic here, and it is something where we need to track those inflows as actively as we are doing here on the channel. You guys know we will be tracking it here. But another big thing that's important to consider when you're talking about your investing strategy is where you're positioned in the market, because if you look across the board on altcoins for the last 7 days as a given metric, right, you will see that while there are definitely some altcoins here in the green, and most cryptocurrencies are up in the green over the last 7 days, there's practically nothing that's below negative territory here in the top 100. The important dynamic you need to consider is that there aren't many cryptocurrencies that are outpacing Bitcoin. Bitcoin's up 19% over the last 7 days, and there are basically a handful, or okay, maybe not a handful, but a couple cryptocurrencies here, less than around 15 plays in the market in the top 100 that are outpacing Bitcoin and outpacing them substantially, right? There are very few plays that are really doing that. Plays, for example, like Stacks, which we've talked about here on the channel, and a few other exceptions here, either emerging Oracle plays like Pyth or other different plays in DePIN, meme coins, Bitcoin infrastructure, you name it. Those are really the things that are leading forward here. And as you all have probably seen in our channel for a long time, we hint a lot on focusing on the narratives here. We want to focus on the narratives that are actually going to carry forward and outpace Bitcoin, because if we don't have those plays in the market, if we don't have a clear narrative or clear plays that fit into these narratives that are available to trade, we should go with the next best bet, which is Bitcoin, right? So again, so long as these ETF inflows keep kicking off here, guys, and we don't see a decay in those ETF flows, which again, we need to keep a sharp eye on if we want to keep ahead of the market, then we got to bet on the next best plays here, right? Now, it is important to keep intact this dynamic we talked about the other day about total 3 divided by Bitcoin and its performance over time. Now, generally speaking, we've seen historically that altcoin cycles really kick off when we get into this lower territory here, back down in the golden range, like it was in October of 2017 or here in December 2020. But it may be this time around that we don't come fully down there. Yet at the same time, we don't get as parabolic and as crazy of a rally in all altcoins respectively. It may even be as well that now could be a time to start positioning in some plays that are outpacing Bitcoin. However, the vast majority of altcoins will continue to bleed in their BTC pairs. I think an example of that here, as we're starting to see total 3 curl up and potentially target towards 600 billion, towards around 800 billion, these kind of upper band ranges from the past. Now that we've got the flip of the Lux Algo indicator since back in December, we're only up around 84% here for total 3. And now that we've got those clear narratives formulating and Bitcoin starting to expand its market cap quite dramatically, and considering that we're at the mid-range here for altcoins, this green band here, where we might get some kind of surplus move, I think the focus point should be on Bitcoin infrastructure plays. Now, one of those that you guys know I've been talking about here is Stacks. And Stacks overall has a few key price points that I'm keeping in mind here. We're going to be talking a little bit about our strategy, about how we approach investing in Stacks going into the next few weeks and months off of continued strength in Bitcoin and what technicals we're going to be looking for. But nonetheless, put that aside for a moment. The key thing here is that we are watching for Stacks to continue here. It is the market leader in this narrative, and overall, it is one of the few plays that can tap into this huge market potential of Bitcoin infrastructure. But there are also other plays out there as well that we're keeping on our radar. However, one of the biggest tips I can give you guys going into the next few weeks and months is that if this optimism continues, the number one focal point you need to keep in mind is to not go from one opportunity to another every single day. Not to chase what's up most of the last 24 hours, but really see which plays are showing consistent weekly returns of outpacing Bitcoin for the most part. It doesn't mean that you can't have a down week. It doesn't mean that you can't have 2 weeks down in a row. But so long as you find plays that are on their BTC comparative, keeping up against Bitcoin, are holding against the 21-day moving average, and are continuously showing up to the plate, that's the kind of stuff that interests me. And I know a lot of people are afraid to, say, pay a premium here for a play like Stacks because it is relatively close to where it topped out back in December 2021 and April 2021. But the narrative now is Bitcoin-centric. It is focused on Bitcoin becoming this institutional asset, this global collateral or hedging asset, and with Stacks being natively built around Bitcoin, we can see the technical formation of the long run. We can see that this may very well have a ton of room to continue climbing here if we can continue that momentum on the ETF side. Not to mention, the BTC pairing has gotten what I've been looking for here, which is looking like it could be very well by the end of this week, the first close above this wedge in price. I would love to see this close here. That would give me much more confirmation on something that I think a lot of people aren't watching for, which is the next big move. I know a lot of people could say, well, we've already moved up here off the lows, more than double here against Bitcoin back in November. But for me, that's what gets me excited. The fact that we've made that move, the fact that we're not seeing a contraction in price, it tells me that the supply-demand imbalance is there for price to really accelerate. So I'm not saying you need to buy Stacks this moment, guys. I'm not like just trying to, shill the project. And no, I've had some people ask me if I'm sponsored by Stacks. No, I'm not. But the key point here is that this is something where the narrative is right, the price action's right, the overall protocol is not some high-risk meme coin or something that's way too speculative that could be a rug pull. It's just overall a good quality project here. And it's something that is showcasing that buyers are more interested than those who wish to sell, where there's a clear supply-demand imbalance. And an environment here where you're seeing this kind of build up in altcoins, you're seeing here as well, again, solid expansion away here from the support band after finding good support here between June of 2023 to October 2023. This is the kind of stuff that excites me. And I see a repetition of history here within price action that showcases and gives me the confidence that we can really have that ascension towards this upward channel. Time will tell when it's going to happen. And maybe Stacks isn't the only play here, but I use it as an example. There's Zeta Chain. There's, for example, a ton of other Bitcoin infrastructure plays. I could probably go through them in a separate video. But I think that there are a lot of these plays that people are starting to put attention towards because they know slowly but steadily that this is going to be the narrative here if we can clear through some of these price ranges of the past. So definitely an exciting trade setup, irrespective in the short term or in the long term here for those varying price ranges. If you guys are interested to get indicators like the resistance and support bands that we have here in our chart, this is a part of the Lux Algo indicator suite that we utilize here in our trading strategies and we feature here on the channel. It's one of the few indicator suites that I like to use here, and I especially like to use it when I'm looking at the weekly time frame to find good long-term entries on corrections, and also find as well when long-term resistance might be coming in. I mean, just look at how beautiful the support band here just showcased solid entries here on plays like Stacks. And when we got a trend flip while we moved higher here, and a lot of people probably expected prices to go higher, we couldn't get a weekly close above that Lux Algo resistance band, perfectly demonstrating here signs of distribution and an inability to continue the trend forward. So this could be a great way to help boost your trading strategy here, guys. And there's a 30-day risk money back guarantee, so you guys can no risk guarantee, so you guys can try out the platform and have a full refund if you guys don't like it at the end of 30 days. But I wanted to go ahead and talk a little bit about the macro here, because the other day we had a pretty significant dip here in equities following, say, a pretty hot CPI print here on inflation. As we can see here on a month-over-month basis, we've had our highest print since back in September of 2023 at 0.3%. And this is getting far away from the Fed's objective of trying to reach a 2% target on an annualized basis. Because if we keep holding at 0.2 or 0.3%, you're roughly going to be getting at the end of the year at a minimum 2.4 to potentially 3.6%. That's not what the Fed wants to see after rising rates as high as it has. And while I know some people will say that, 3% is the new norm, yada, yada, the Federal Reserve has a mandate towards 2%. And on top of that, if you look back at history, in order to keep 2% inflation long term, which is what the Fed's real goal is, not just getting it to 2%, they need to get it well below 2% for a short window of time to crater inflation and really bring back prices to an equilibrium of supply and demand. Unfortunately, the Fed's efforts are not getting us there just yet. And that's why markets took a pretty big hit the other day, whether you look at the S&P 500 or the NASDAQ, etc. Nonetheless, the key point here I want you guys to keep in mind is, while I think over the long-term roadmap, we're going to have a lot of pain coming down the line, at the same time, in the near term, the trend is still relatively strong. I would expect that we see prices dip down here towards the Lux Algo support band from around 16,000 points on the NASDAQ down towards around 15,000. And whether or not we hold on that is going to be a determining factor as to whether or not we need to be more cautious on the future outlook of altcoins, the performance of Bitcoin as an asset, as assets tend to move in together in tandem with that upward trend direction. You can just see this from October of 2023. The NASDAQ is up from 12.5K to right under 16K. It's no coincidence that Bitcoin also started expanding during that window of time. So while I know a lot of us are excited about the ETF inflows, we've got these altcoin setups here, you also need to keep in mind what's going on in the macrosphere, because that will dictate global liquidity flows and can easily start to disrupt that positive inflow of ETF inflows that we've been seeing over the past few weeks. If investor sentiment starts to get a bit more shy, people are starting to reserve more towards dollar liquidity, and they're waiting for lower prices for entries. That's an important dynamic to keep in mind here. I know things are looking great now, but again, at the same time, I wouldn't be doing you all justice if I didn't be the FOMO killer sometimes and just say, hey, look, let's not be in la-la land 24/7. We've got to be rational. We've got to be protective of our capital first and foremost. And while there are definitely some great opportunities here and some nice upward size returns to be made versus a potential downside risk if the trade doesn't work out on some of the positions we talked about, we still need to remain vigilant and accept that that is a potential scenario. The latter of those two could definitely play out as well. So that's it for today's video, everyone. Thank you all so much for letting me ramble. As per always, if you guys like this video, consider dropping a like. It's a great way to support the channel, and you guys can always check out also along with that as well, not only Lux Algo, which we talked about earlier, but if you're looking to basically advantage yourself, not just by maximizing returns in the market, whether you're investing or trading, but outside of that as well, to take advantage of tax strategies that can help you to minimize your tax obligations, definitely consider looking into an individual retirement account or IRA through iTrust Capital. They're one of our partners here on the channel. And I definitely recommend you guys take a look into it because you can basically add in contributions month by month here into your IRA and be able to trade or invest tax-free on the platform in a whole range of established cryptocurrencies as well as some of your favorite altcoins. And the great thing about it is that you only are going to pay tax when you go into retirement at a much lower income tax bracket. So it's a really cool tax advantage account. One of the many ways here where, again, you can basically benefit from having some contributions in there, not having to worry about the tax obligations, and be able to start saving up for retirement while investing and trading in a whole range of cryptocurrencies that you guys love and know. So definitely check out the link down below in the description. You guys will get $100 if you sign up on that. But that's it for today's video, everyone. Again, if you enjoyed it, consider dropping a like. I hope you guys have a fantastic day wherever you are, and I'll see you guys right back here on Friday at 6 a.m. Eastern Standard Time. Take care, everyone. Have a great rest of your day.